closed the books on a record-breaking year for the markets in 2017. It's time to look ahead to 2018. In this morning's U.S. Bank Economic 360, U.S. Bank Senior Vice President Mike Denneman joins Business Courier publisher Jamie Smith in the studio to talk about the year ahead. Gentlemen.
Thanks, Peg. Mike, thanks for being here.
Good morning.
So a successful 2017?
Very much so. You know, as Peg just said, it was a record year. You know, we talked a number of times last year about all of the milestones that were being set. You know, the repeated record high closes, getting to the highest level in market history. The Dow passing 20,000 for the first time. Right at year end, almost passing 25,000. So, yeah, by any measure, it was a very good year. The market gained about 20% last year. So that was his best yearly gain since 2013. And certainly we've come out of the gate quite strongly this year as well. So the question at the top of everybody's mind is, you know, this is great, but can the market keep up this pace?
Yeah. So what do you think, looking at 2018? Well, it's had a good start, but
a very good start, and there are certainly reasons out there for optimism, but some reasons that investors might want to be cautious as well. In terms of the good news, you know, much of what was in place last year that helped the market remains in place today. We've got
good news.
Yeah, an improving economy. We've got low interest rates. We've got low inflation. We've got corporate profits that are growing. So all of that combines to be a pretty good environment for stocks to grow, as we saw last year, and those circumstances, you know, remain mostly in place today. Layer on top of that the new tax law changes. That has the potential to help both consumers and corporate America, so that has the potential to be something additive as well. So, you know, if you're an optimist and you look at all of that put together, you say, hey, the glass is still half full.
So, you know, going forward, it seemed like all of our interviews last year was optimism, but there was always cautious optimism.
Sure.
Is there anything going into 18 that we should be cautious of?
Yeah, unfortunately. Despite all that good news I just outlined, market history is working against us a little bit, unfortunately. Another milestone that we had last year was the record low volatility. The market just did not bounce around a whole lot. Rather, we had that nice smooth upward you know, it kept going and going on that smooth pace, and that's not how the market typically works. We expect the market, in fact, to be erratic.
Right.
Over history, you know, the market has averaged a pause or a little bit of a downturn roughly once per quarter. And we've now gone well more than a year without having one. And so we are due, if not overdue. And so that's hanging over us. And then also, statistically, history has shown that the year following a very good year for the market tends not to carry that momentum over. So again, the averages say that following year generally only has a return or a gain in the low to mid single digits percentage-wise. So that's not necessarily a bad thing. In fact, that's kind of the definition of an average year in the market. But it certainly suggests that we shouldn't be expecting another 20% return.
So how long before you think you have a good idea of what we're going to see, say, by mid-year?
Well, you know, that's the beauty of the market, is its nature to surprise us. You know, those kind of things. We can say we're overdue for something, but we can't pinpoint exactly when. So we'll just take it as it comes. It's been a good start so far this year. Hopefully that momentum continues to build. But we just need to be on guard for something.
Well, I'll be optimistic because I know you'll be back here to keep us informed.
We will keep you posted.
All right, great. Thanks, Mike.